And the previous bull market was driven by DeFi and then later NFTs and metaverse, blockchain game, etc. What will be the other trends for the next bull markets? In what maybe you can share some altcoins you invest now into, like maybe these are some ZK EVM solutions or NFTs, gaming, metaverse related tokens, infrastructure about that.
Right. This is good because the first three examples, I would say well, these three examples I'm quite critical towards. So because I'm a fan of monolithic scaling, so really scaling through the layer one blockchain, I'm not a huge fan of layer twos. So things like ZKM EVMs, or I think that's you're referring to layer twos in this case. And I'm not a fan of that in particular. So I think that you can build layer twos without tokens, so therefore it's very hard to build value around that. And I just think the user experience is just inherently much worse compared to just using a scalable layer one, and there's security and trust trade-offs involved. So I think all the way down, it's just not a good way to scale your blockchain through such solution as that. Generally, I've been very skeptical towards NFTs. I think in the vast majority of cases, I think the NFT use case doesn't really make sense. I don't really see how it's actually really solving a problem. I think most NFTs, you think you own a JPEG or a particular image, but if copyrights aren't attached to that, then what you really own is just a hash on a blockchain, which might be extremely unique, but it's as unique as a grain of sand is on a beach. It's provably unique, but it's also not that special, right? So I think I've been very critical of NFTs. Metaverse, I would say I'm also very critical of, actually, because I think even the terminology doesn't even really make sense. I mean, metaverse is really just a rebranding of the term cyberspace, which is this idea that in other words, we're in the metaverse right now having this conversation, and if I'm playing a computer game, I'm in the metaverse, and if I'm on Twitter, I'm on the metaverse, and all of these things. And I do happen to be a gamer as well, and I do also am a bit of a VR enthusiast as well. So you'd think all of these things would come together for me, but I think if anything, it gives me a more unique perspective in saying, actually, what, this doesn't make sense. And when it comes to gaming as well, I'm also not convinced that a lot of things like game assets or game tokens. I think play to earn is just the other side of the coin to play to win. Pay to win. And I don't think these create fun games. I think that in a digital world, this idea that we have post-scarcity in a digital world is actually a good thing. And I think introducing scarcity and this kind of economic scarcity into a digital world, I don't think is conducive to actually good games. And I think in most cases, it seems to me that in the case of the metaverse, that play to earn is just the other side of pay to win. And I don't think this makes for fun game experiences. And I think that there's an advantage to the post-scarcity that we have in the digital world. I think that actually is more conducive to actually creating good games. So in that sense, I'm not a big fan of the whole metaverse space either. Not saying that people can't put a lot of money into what I consider nonsense. And I think some of these games are actually just end up just being giant casinos for people that are inclined towards gambling. I think there's a lot of that going on as well. DeFi, on the other hand, I think has a lot of potential. Actually, I think DeFi is interesting, and also can also serve as a very useful stepping stone towards larger cryptocurrency adoption. I just think that if you think of cryptocurrency as money, and you have money on a wallet, say, that looks like a bank account, so that you can have interest, and that you can do leverage, and that you can do insurance, and that you can do all of these things with your money, that your money is programmable. I think DeFi has a lot of potential in that regard, unlike the other things we just went over.
As a fund, do you put any assets into any DeFi protocols? So do you purely invest only into tokens?
Yeah, no. So actually, we do a mixture. So the majority of the fund is focused on layer one blockchains. So really the base layer, things like Ethereum, Elrond, and Near, and Ton, and these kind of things. Avalanche. These are all layer one blockchains that we might have a greater focus on. So we have that focus, and that's partially because we really think that we're still so early, so it makes sense to invest lower in the stack. And it's also, part of taking a more conservative approach as well, in that I think, when you're investing in something like Ethereum, you're also betting on the success of everything built on top of it, as opposed to investing in like a single team or a single use case. But we also invest in like DeFi projects as well. So like things like different types of DAOs, and things like Aave and Nexus Mutual, and these are all very interesting investments and use cases for us as well. But we just create a balance between what we call the layer one blockchains and the money Legos, the different use cases, and I think that's how we like to approach it, because we see a lot of interesting use cases come our way sometimes. We were early investors in Aave, we're in early investors in Chainlink as well. So a lot of the big blue DeFi blue chips today, we were early investors in, because we really identified that, hey, this is a real use case, and from that use case you can also see how value flows. So we always want to see like a clear value proposition. So when we're investing in a cryptocurrency, we have to think about, okay, does this make sense technologically, right? What is the consensus algorithm, right? Then we ask, what is the use case? Like, is this actually useful, right? Is this something people actually want to use? Is it cheaper, faster, easier? Is it more convenient? Is it more secure? Is it all of these things combined, right? And just because something has a good technology and has a good use case doesn't mean that it's a good investment. And that's where we get into understanding the value proposition, or what mechanisms are there that create demand, on positive demand on a token, if the underlying platform is being used. So that's this kind of rule that we apply thinking about cryptocurrency, to understand, what is really good token economics. So something like Uniswap, for instance, has been very frustrating for us, since I love Uniswap. I think it's great what they're doing. I think decentralized exchange is a very important pillar as part of like the DeFi ecosystem, but they don't have a clear value proposition, and how some of the fees should be going back to the investors. And that's not happening with Uniswap. So it is happening with something like Maker and Aave. So I would pose these as being better examples in terms of good token economics. So in that sense, that's been a very interesting area for us to explore and to understand, and to dig deeper into. And I think there's a lot of potential there. And I think combining money with finance, I think is important, because I think good decentralized money actually needs good decentralized finance to support it. And that way you also really bring the full suite, say, of use cases for new cryptocurrency users. And I think that's incredibly important. But I'd rather that they keep the tokens out of my games.
That's quite interesting. You mentioned a few layer ones, like Nia. Nia is still popular as a token, I guess. Elrond and Ton. Elrond seems to be some kind of like layer one, alt layer one blockchain, which is not hype now. Ton as well is pretty new, and Nia ecosystem is as well. There are not many projects built on Nia, so what are the reasons that you bet on these protocols, on these layer ones?
That's a good question. That's a good question. And there's a single uniting reason, because I'm a fundamental investor, right? So all of these blockchains, Near, Ton, and Elrond, they all have sharding. They all have execution sharding, and they all have, at the very least, they've committed themselves to doing on-chain governance as well. So for me, those are two very important features that I like to see, because I think that execution sharding is actually the best way that we can scale blockchains. And I do think that unless Ethereum actually pivots back to execution sharding, and actually scales its layer one capacity, I actually think in the longer run, it will actually get outcompeted by blockchains that can scale its layer one through sharding, which allows you to really scale to massive scale while preserving decentralization. And I really think that that is the way forward. So I think that Ethereum, unless it pivots back its roadmap back to what Near and Elrond are doing, and Ton for that matter, and a few more, I think it will actually lose in the long run. And this is why we also have investments in those cryptocurrencies specifically, because we're just very bullish on that method of scaling. And I don't believe that having a limited capacity layer one is a good solution at all, because it fragments liquidity. It creates a terrible user experience, because people have to now think about, it's not just like, if you have Ethereum and I have Ethereum, right? You could just hold up your QR code to the camera and I could just send it straight to you. So that's so easy, right? That's competitive to like, banks, right? And legacy systems. But say if we're in an ecosystem, we say layer one is expensive and we're using layer twos, I would have to go, okay, so what layer two are you on? What layer two am I on? How do I bridge between your layer one and my layer one? Does your layer one have an admin key? Is it actually centralized like Polygon is, right? Or Optimism also has an admin key, right? So, these questions, I think, make it a far worse experience. And there's all these extra steps involved. And I just don't think that that's competitive from a user experience perspective. I just think, especially considering that we're able to do it on chain. And if you do it on chain, you have greater security guarantees, you have a better user experience. So I think if we can scale on chain, we should. And I think that blockchains such as Near and Elrond and Ton and more are actually proving that we can do it. And I think that's part of the reason why, 2023 is such an exciting year in cryptocurrency, is because these technologies are really being developed at a great pace. And I'm excited to see them come to fruition.
Yeah, that's quite interesting point of view. And what are your thoughts on Cosmos?
So Cosmos is, I view it as being quite similar. I think it's really focused on this app chain narrative. So in that sense, I view it as being quite similar to Polkadot as well. I would put them in a similar bracket. I'm not a fan of that design, for similar reasons that I mentioned before in terms of the fragmentation you get with layer twos. In the case of something like that app chain configuration, you also you don't always have full shared security either. So I don't think it's the right way forward. What Cosmos is doing. Nothing against the team. I think they stand up. Same with Polkadot. I think they're great guys and they get a lot of things really right. I'm just staunchly in the monolithic scaling camp, and something like Cosmos and something like Polkadot is very much a modular design towards scaling, and I just don't think that that's the right solution. I really and that's one of the nice things about being a researcher in the space and being very focused, and also having a team of researchers and doing this for such a long time. Like I've been doing this for I've been doing this for more than a decade now. I think over time, you can gain more confidence in things, you know so I can have a lot of certainty in my belief in where cryptocurrency is going. I mean, and the more I look into these things, the more obvious it becomes. I'm not saying that cryptocurrency research isn't challenging at times. It certainly is, and sometimes we can debate the nuances, and sometimes I do change my mind. Sometimes I do have a shift of perspective, and I'm constantly looking for that, right? I'm constantly looking to change my mind. I'm constantly looking to be challenged. That's part of why I'm publicly a critic as well, because I want to be challenged. I want people to push back on my ideas so that I can learn. If someone can prove that I'm wrong, then I'm going to be very thankful for that person for showing that to me, right? And that's part of the power of philosophy. That's part of the power of rational thinking. And that's something I really want to embrace. And I think that's part of my approach to understanding cryptocurrency and participating in it.
And you mentioned as well that you pay quite a lot of attention on governance. So which projects, in your opinion, have the best governance model?
Yeah, so I'm a big fan of on-chain governance. I think that's very important. So what that means is stakeholder voting. I really think I don't think there is a better alternative, because it's not possible to do one person, one vote over a blockchain unless you introduce KYC and or proof of human type of stuff. But I think all of those things have flaws and introduces points of centralization. So what we're left with is really stakeholder voting if we want to have a formalized governance system at all. And I think the alternative to that is you have a lack of formalized governance. And what ends up happening, I think, every single time is your blockchain ends up being captured. Your blockchain ends up being captured by bad actors who are able to control and command basically the future of that blockchain from the center. I think that's what's happened to BTC. And I'm very worried that that's happening to Ethereum now as well. Very worried, actually. And I think this is one of the biggest problems that blockchain face. I even think it's a bigger problem than scaling, because I can see how we're solving the scaling problem. That's a technical problem. I think the governance problem is a far bigger issue. And I think I've seen it time and time again. I think that's what happened to BTC. I think there's a huge danger of that happening in Ethereum. You know, if you think about it, there's a lot more money for developers when it comes to layer 2 development compared to layer 1 development. I think that is biasing a lot of people. I think that might be acting as a corrupting force. So I think when you don't have on-chain governance, what you have is a void of power. And that void of power is then filled by bad actors, because power corrupts and absolute power corrupts absolutely. And it also attracts the worst kind of people, like the kind of people that want to be in those positions. Actually, not the kind of people that you want to be in those kind of positions. So the way we need to think about governance and the way we need to think about on-chain governance is actually these mechanisms are there to actually prevent and to curtail the centralization of power. It's there to actually protect decentralization. Because if you don't have on-chain governance, your blockchain will be captured. And I think that is what is going to happen inevitably to any blockchain that doesn't implement good on-chain governance. To answer your questions, which blockchains have good on-chain governance, I think Tezos has done a really good job there. Decreed has done a really good job there. Polkadot, actually, I don't like Polkadot's scaling solution, but I actually think they have a fantastic system of governance. I actually think it's really interesting how they've designed it and how they have divisions of powers, and checks and balances, and all of these things. So, yeah, no, there's plenty of examples. There's a lot of examples of good governance in cryptocurrency. It's overall still lacking. But yeah, I'm very concerned about. I think Bitcoin is. I think it's straight up captured. I think that a small number of individuals are effectively able to gatekeep the rules of the system today. That's why I don't think Bitcoin is very decentralized at all, right? If small amount of individuals are able to gatekeep those changes, and any dictator, right, has limits on their power. Right? It's not like the BTC core team can make any change, but that doesn't mean that it's not a dictatorship. And I think that's highly problematic. And the only way that you can hold such groups accountable or create that decentralization of decision making is to do it through the validators, is to do it through the consensus mechanism. That's why proof of work was invented in the first place, is all needed rules can be enforced with this consensus mechanism. That's what it says in the white paper. And I think that's also incredibly important, that, this idea that, without governance, we just end up being controlled by shadow rulers. That's what ends up happening. Because, the reality is, right, this is the reality. And this is why I mentioned earlier as well, that if you don't have a lot of scale, then your system is not truly decentralized. And decentralized governance doesn't really work at scale, because the reality with most blockchains is this: if you get the 10 most influential and powerful people of that blockchain ecosystem in a room together behind closed curtains, so to speak, and you get them all to agree to a certain course of action, and then you come out together with that course of action, then that's what's going to happen, right? So that's not decentralized, but that's how most blockchains work, right? It's politics behind the scenes. That's the reality. That's the stuff that the people in power don't want us to talk about, right? That's how these things are actually controlled, right? And we're not going to completely get around this problem until we're at a much bigger scale. And I think that was always the goal. The goal of cryptocurrency is to grow it so big that no single party could ever hope to control it, right? And I think the way you do that as well is through this idea of having formalized governance, like have a proposal, you vote on the proposal, and then you have an outcome. And there's two reasons for that. It's not just to have good decision making, which is important, but it also protects against centralization, right? It protects decentralization, right? But it also helps unify a cryptocurrency as well. Because what you don't want is you don't want after every controversial decision that you split off. You know, it's not like in a democracy, right? If you vote in a democracy and you don't get the outcome you want, you're not going to go have a civil war every time that happens, right? You accept the outcome because you're like, well, I might not agree with the decision, but I agree with how we got to that decision. And I think that's very important as well in having a social contract and having an agreement around how do we make decisions. And that actually helps to unify a cryptocurrency. So like these are three very important reasons why we need decentralized governance, why we need on-chain governance specifically. And that's very much like leveraging the advantages of blockchain as well. I think that's absolutely vital moving forward. I don't believe in a cryptocurrency if it doesn't have on-chain governance, something I'll continue advocating for over Ethereum and supporting cryptocurrencies as well that do implement this properly.
Thank you for sharing your thoughts with us, sometimes even quite controversial, and it was quite interesting interview.
Thank you so much. It was a pleasure being on here.
Thank you.
Thank you.